Guys, we got leaked information about earnings. Oh my God. And where does this information come from? Well, every now and then, NIO has these face-to-face meetings where NIO owners can go to a NIO house, and NIO CEO or president will be there to answer some questions and give a update on the current affairs of the company and updates on the company. And these are pretty critical because at the start of this year, NIO CEO did say that R&D expenses were going to increase by about 30%. At the very start of the year, he revealed that to NIO owners, and indeed R&D expenses increased by upwards of 40% all the way to 60% for quarterly reports. So they actually recently held another one of these in Chongqing. Of course, I didn't go, but people there were able to summarize all the meeting, the events, all the key information, and this is where this information came from. And guys, pardon me if I don't look into the camera because this light is blinding the shit out of my eyes, so I'm looking to the side. Some of you guys said I should look into the camera. So the first explosive news is the fact that there is a massive increase in revenue, and this is to be expected. They had very good deliveries, all right, and we're going to do a revenue estimate, what my expectations are for revenues going into earnings that are coming out very soon, and also some other interesting details. Okay, so very important video. So the CEO did say, and I quote, there's a massive increase in revenue, which is very good, and it's pretty obvious. I mean, those 3 months were some of the best ever. July, August, September, very good deliveries those months. It's going to be the best quarterly report that we've ever seen, okay, in terms of revenue wise. The very high revenue. It's going to be very good. He also revealed that margins have seen a very steep rebound, okay, a very steep rebound. How much rebound? I think margins might go into the double-digit territories again. That's very beneficial. I'll talk about a few factors affecting margin very soon, but first let's give an estimate on the revenue, what we can expect for revenue. Well, in Q3, the deliveries were 55,432, which was a year-over-year increase of 75.4%. Now, if we take the Q2 average revenue per vehicle and then you multiply that by the number of vehicles sold in Q3, then you get 2.881 billion US dollars revenue estimate. All right, cool. But if we take the Q3 of 2022's revenue and then you increase that by 75.4%, which was the year-over-year deliveries increase, you get 3.205 billion US dollars. So we could be looking at somewhere between 2.8 to 3 and above billion dollars US dollars in revenue, possibly. Very, very good. Now, I do have to note that the delivery makeup is very different when you compare Q3 right now and Q2's numbers. And back then, at the end of Q2, they did do a price adjustment, a price cut. Not really a price cut, but you still had the option for those months. You still had the option to add the extra 30,000 RMB to get free battery swaps, and it was the last remaining possible way of getting free battery swaps for life, and a lot of people did choose that package. So that is extra revenue for NIO. So keeping that in mind, even though for Q2 numbers, most of those deliveries were ET5 and those vehicles, I'm expecting that number, 2.8 billion, to be the absolute minimum. All right, this is a lower bound estimate in my personal opinion. Now, it goes without saying that with this, we're going to see an improvement in the losses. All right, I still do expect NIO to lose money. Not going to be profitable, okay, in my personal opinion, but I think the losses might narrow down quite significantly and see a pretty nice improvement. The one big caveat that's really preventing NIO from getting profitable, and this is something that I think everybody needs to know, is the amount of infrastructure they're deploying. Really at the start, in around Q3, at the start of Q3, they had 2 factories pumping out swap stations like crazy and charging stations like crazy. They deploy about 4 charging stations per day, around 4 swap stations per day, around roughly that, all right? But you can imagine the amount of money that goes into that, and then also the amount of money that they spend on R&D. So they're investing a lot of the money, which is spending money, but on paper it looks like losses, but it's actually investment in infrastructure, which is very, very good. A lot of people don't seem to have a sense about how big NEO's infrastructure is. Right now, NEO has 2,300 swap stations. Doesn't seem like a lot on paper, but for an average NEO like my car, I swap about once every week. And if I were to swap at every single swap station out there right now, it would take me 44 years to go to every single swap station if I swap once a week. Same thing with the chargers. So NEO has a ton of infrastructure. All of that is money, all right? Now, I think a lot of investors have already maybe priced in the fact that earnings are going to be spectacular. But what people will be looking out for is, of course, guidance for Q4. And Q4 guidance might not look so pretty. It might be a quarter-over-quarter decline in terms of revenue because obviously deliveries aren't as high as it was back in Q3. And that could possibly raise some eyebrows. Now, one really explosive thing that they might talk about is obviously the partnerships with a lot of these other guys. And in some leaked conversation, I've learned that these swap stations with these partners, NEO is only going to be putting out part of the money. So it's going to be those companies and NEO putting money to build swap stations together. So that will, of course, really help on the cash burn side of things in the future. But I hope that the CEO is able to outline exactly what they're able to get out of this deal, like numbers wise, all right? And guys, NEO's strategy right now is to have energy dominance and use up existing electricity capacity, because at a lot of places you can only have so many chargers or so many electricity facilities. That's the maximum capacity that the grid is able to provide to that area. So by using that, having your chargers there, that means you've used that capacity. Then if somebody else wants to build swap stations or charging stations there, it's very difficult to do so. Now, a possible black swan thing that might happen is, of course, addressing the factory stuff. JC selling the factory and going to bed with Huawei in a sense, and NEO essentially forced to buy this factory for 600-ish million. That would be a pretty big expense for NEO, and we'll have to see how this situation all plays out and what NEO's cash situation will look like. I am fairly confident that NEO knows the limits, the boundaries of their resources, so they're not going to overspend if they know they can't pay for it. All right, like infrastructure, if they think that they're going to be running out of money, then of course they'll slow down the infrastructure deployment and all that stuff. But it seems like management is quite bullish on the future, so we'll just have to see how the earnings report looks like. As always, stay safe, stay healthy, peace out.